Welcome to the night where we light up the spark. We're trading crypto, find out you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, let's shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode.
Oh, big crashy. Big crashy. Good evening. Welcome to Markets After Dark, where we go mad on the charts. I'm Lunar Beaches Crypto, coming to you live Sunday through Thursday, 11 p.m. Eastern Standard Time till midnight, sometimes a little after. That's just how the things tend to go sometimes. I mean, we get into the charts, get into the news, we go over cryptos, we do all kinds of things around here on Markets After Dark. Thank you for joining us as always. Yeah, so guys, we got a little bit of a dipsy do, and but now we're getting a little bit of a push to the upside. Maybe we get that bounce. We come up well, we'll see. We'll get into the charts. And of course, tonight we have our special guest, Trade Intuition, joining the show with the bingo and a bango. Throw the bingos and the bangos in the chat. I already saw a few of them in there. But yeah, Mad Lunar Moon incoming. Yeah. So yeah, what is going on, guys? Let's just go ahead and bring up the chat. Say hello to everybody. Let's say hello to everybody. Come on. Works, Streamlabs. Come on. Any day now. Oh, I guess it would help if I had actually did the whole thing with the chat. Am I still alive? I'm freezing so much right now. Hello? Okay, sorry. This is my bad, guys. It's always something when you've got a guest on. That's just how it goes in the YouTube world. Okay, let's see. Nope. This one. Is this my beautiful people? There's my beautiful people. Hey, everybody. Hey. How you guys doing over there? Looking all cute and stuff. What's going on, everybody? How are you doing? Let's say hello to everybody in the chat. Come on. Act right. All right. Come on now. I know we've got a guest on, but that doesn't mean you have to act stupid, okay? Come on now. Let's do this right. All right. Starting off, we've got Jay Violet in the chat. Good evening to Jay Violet. Good evening, Alexandra G. Good evening, RS Miller. Mr. Miller said he was locked out of his Coinbase account this afternoon. That is no bueno, sir. But remember, they're doing it for your own good, apparently. Allegedly. I think a lot of people would say that I would like to have access to my money. That'd be great. My crypto. All set. What's going on? We've got Golden Wolf in the house as well. And of course, Trade Intuition. Speaking of which, let's just go ahead and bring up the man himself. Where are you at? Puget Sound Side. I have no idea what you're talking about, RS Miller. All right, let's see. Where is my guest? Guest? Hello, guest? Where? There it is. Whoa. Oh, bingo and a bango, and he's not there. What? Where'd he go? Where'd he go? Show on stream. Come on now. There he is. Oh, T.I. Joe. Trade Intuition. What's going on, brother? How you doing?
What's going on, man? Doing good. It's a lot of delay because I'm actually having to watch it on YouTube because I can't see it on Streamlabs. So just kind of give you a heads up. But doing good, man. Doing good.
That's good. As long as you can hear me, I guess that's good enough, maybe? I don't know. You can look at the visuals.
We'll make it work.
Yeah, we'll make it work.
Make it work.
We'll make it work. But yeah, so no, not for my own good, LBC, especially with tomorrow coming. Oh, wait, what's tomorrow? Economic data? Pop is 404. I don't even know what is going on in this chat. These people are always talking about some stuff that I have no idea what's going on. Anyways, Joe, what's going on? Welcome to Markets After Dark. Thank you for joining us and gracing us with your presence. I'm excited.
Very happy to be here.
I'm excited to get into some charts with you and maybe pick your brain a little bit. And but yeah, I think we share a lot of the same mindset when it comes to just community in general, like the people, you know, your people, find your people. I remember the first time I came across your channel and you were kind of you were calling some people out over some fishy stuff. And
not fishy stuff. I call it BS. People who are stepping on other people's back to elevate themselves. I call it the way it is.
Yeah.
I'm old already. I don't care, you know. But yeah.
And I was like, man, I would respect the hell out of this guy because he's calling out other people that, that basically, are scamming the people that they're supposedly they're supposedly helping. And but
right.
Piper Academy Network is drama free, so we won't dive deep into it. But I just wanted to share that with you. This is like the first time I watched you. You were going off about some guy, and I was like, all right, I like this guy. He seems like a good guy. It seems like he's looking out for his people, and that's good.
Right.
That's good. I love it.
It's funny, man. When I was talking to Piper was saying, you can do your thing, et cetera, blah, blah. And I said, okay, that's cool. And he goes, but it's a drama-free zone. I said, I know. I won't do any drama. I try to keep that on my channel. If you want drama, go to my channel. So there it is.
Go to his channel. All right. And if I still had, well, I still have my channel, but if I ever post on there ever again, who knows? I'll kind of do whatever I want over there. But
just out of respect. Yeah.
Oh yeah. I mean, you got to. Because there's plenty of times when I'm sitting on here and I kind of want to come on here and I want to, I don't know, call people out, but I try to be a good boy. Good vibes only in the chat. Yes, Alexandra G, absolutely. Thank you so much for that. But yeah, man, Bitcoin. What are we thinking? What are we thinking?
I'm thinking long right now.
Do we just want to bring up the chart? You want to bring up your chart? You just want to chart all night? We can do that.
Chart, talk, different theories.
Yeah, I'm all game. Let's bring yours up.
Yeah, R.S. Miller. R.S. Miller says, I've never seen drama on my LOL. Oh, drama. Man, I'll tell you what, I let it all out. Like, I don't even care. So I just don't want to get sued, But so I got to be really careful because most of my stuff, it's all dreams and stuff that I, thought in my dreams. So yeah.
You did in a video game, whatever. All right, so I've got your chart up, my friend.
All right, very good. So right now we're looking at Bitcoin. We were seeing this. I mentioned this on my channel yesterday, I believe it was, when the price was up here. And And I just let people know that to me it's not looking strong. We had a bunch of really nice movement, going up and coming down and going up and coming down and going up, and just stopped. It's just stopped. We had this level that we needed to break, and it came up to the level, got rejected, came up again, got rejected, and then it was right here. This was at my 12 o'clock show, and I had made a video for my group prior to the show. I said, man, it's not looking good. It really needs to hold this 104.269. If it doesn't, I mean, the next, coming down here, and then also coming down here, more than likely. If it doesn't bounce, this is a good level for it to come down to. And then, sure enough, it just rolled over. I mean, didn't even try. Didn't try to get support, bounce, nothing. Just came down, and then it came down. Man, it came down hard. So when it was here, we already missed most of the move. And I don't do shorts. For me personally, it's, can you short? You can short anytime you want, just like you can long anytime you want. But it's difficult to short in a bullish market. Granted, this is nothing like a true bullish market. However, we are in, as long as the price. Oh, I was doing a short earlier. Get out of here, negative. I closed it out too. Get out of here, negative too. But if we close underneath this, bearish, very bearish. If we close above this, extremely bullish. And right now, the overall, let's go to the daily so it's easier to see. If we close up, oh my.
Can I ask you a question?
I got my back up. What's up?
So when you say if we get a close, what time frame are you talking about exactly?
Very good question. It depends. Normally, I like the 1 hour. For Bitcoin, I like doing 1 hour. I'm not sure if I'm going to be able to charge this. Let's see if this plug works. But I like the 1 hour. And that's just because the 1 hour for me gets respected by Bitcoin. Of course, the higher the time frame, the better.
Mm-hmm.
But here, if we close underneath it, bearish. Goes above it, bullish. Anything in between this, it's fair game. It can go up, it can go down. So if you want to short, you can short anytime. But for me personally, I like trading on the 1 hour for Bitcoin. And here, it came down. And right when it was here, I told my community, I think it was like, I don't even know, maybe 10 at night or something, my time. And I told them, all right, guys, because I had one of my members ask me, like, how come we don't do, how come you don't want to post a short? You think it's going to go down. Why don't we do a short? I said, because I'm researching. Like, I'm frying bigger fish. I said, if you want, we can do a short. So then I posted a short. 6 leverage, short. First target was like 1%. Second target was like 2%. And then 3%. And I posted it on Twitter. But we got to our second target, and then it flipped. It's fine. I'm warning them. I'm telling them to move their stop loss, all that fun stuff. And then here, I believe it was prior to my show today, did another short. And then right now I'm doing a long. And so you can do shorts and longs all day long. It just depends how long you want to hold it.
Mm-hmm.
Now, I'm not sure about you, but there's a lot of people that like doing the top-down analysis.
Mm-hmm.
So they'll do, the 4 hour, the daily, the 4 hour, the 1 hour. But when I'm trading leverage, I'll go to 5 minute. So I'll do my 5 minute, and I'll do this. Questions, comments, concerns, issues. Any questions? I think I have a lot of delay on the YouTube, but but I'm listening to you on Stream Deck. But yeah, so as far as this goes right here, I decided to open a long because it was above my VWAP on the 5 minute time frame, above my 9 moving average, and then it was about right here when I saw it. I was like, let me try it. Let me go for a long. Because my overall thought process before was it needs to bounce on this level. When the price action was up here, I was hoping it would come, if it came down, come up, come down, bounce over this level, come up. But it broke completely down. So then when it did come up, and then it didn't break above the level, this zone. And again, I'm on the 1 hour time frame. Then of course I go 15 minute time frame. and I see this, and it's struggling to close the zone. It closed in the zone, but not above it. So right when we went to this one, I said, let me short it. So it shorted. Once it closed below this, I gained confidence in the trade. Then I wanted to break this next level and this next level, but it only came up to here. And once it started coming up, so what I do is I just do level by level. Once it breaks this level, it's like, okay, now the trend's probably changing. Let me move my stop loss really tight, take some more profit, and then start coming up. I don't remember if I went long here. I probably did. And that's pretty much it. So what I wanted to do is I wanted to bounce in this area, and that's what it's doing right now. All right, go ahead.
I was just gonna say, what do you? I guess. I mean, I probably already know the answer. It's pretty much whatever fits the trade. But what do you mostly do? Are you more of a low leverage, high margin, or low margin, high leverage type of trader?
I like doing low. I like doing
Or
low margin, high leverage on Bitcoin anyway. Because if I lose $10 or $50 or $100, I don't get, I don't worry about it. But if I put, some money in it and I use high leverage, seeing the money come down is not good. Seeing the money go up is great. It's perfect. But seeing that amount of money come down with high leverage, I don't like it. So now on other coins, if it's a longer term play, and that's another thing too, like so for Bitcoin, for example, if I plan to be in it for a few days, maybe a week or two, I'll use higher margin, so higher money, but lower leverage. So it gives me time for the play to actually, the trade to actually play itself out. But if I'm just wanting a real quick, maybe a few hours or a few minutes, I'll throw in higher leverage, lower money, and then that way I can just watch it for, not watch it, but see the trade play out within a few hours and then take my money. So it depends on how long I want to be in the trade.
Yeah, that's basically it for me. It kind of depends on the time frame that I'm trading on. It's a 5 minute. I think that's more of a scalp. You're in and out, high leverage, low margin, right?
Right.
Higher the time frame, the lower the leverage, the more the margin. That's kind of how
Exactly.
I manage my risk on my trades. But we got Army Piper in the house saying, "What's up, gang? What's up, Army Piper?
Hey, what's going on, man?
Go to bed, boomer." No. We love Piper. Piper's here to learn how to be bullish. I don't know about that because once I bring up my charts, I'm not very bullish on Bitcoin, or at least I will say I am short to midterm bullish. I'm basically bullish until about March, and then I think stuff's gonna hit the fan. But I don't know. We'll see.
I agree. Yeah, March, I'm gonna be, on high alert. We may go into April, maybe even May, but I'm gonna be on high alert come March. And so what I do, like the simplicity that I have for my trades, very just like basic, but I mean basic works. 4 hour time frame, or 1 hour or whatever you want, but higher time frame better. 4 hour time frame. If let's say we're doing this, as long as we're breaking this level, we're good. We don't want to cross this level. So this is the level that we don't want to cross. And we just keep on trading this all in March, whether you're in the 4 hour time frame, the daily, whatever you're doing, you just don't want to cross the low. Once you cross the low, it's like, whoa, watch out. Now, this is not saying that we will go down. This is saying this is the start of a possible change in the trend. And this is extremely basic. Like this is the stuff that we learn in the very beginning before we start tacking on all the additional stuff that we have in our tool chest. But this is what we do. And so if it comes up and now it does a lower high, doesn't cross this level, now it's pretty good chance we're going to break this level. It's not for sure, but even if we do break it, now we can still come up. So for me, I just keep it really simple. I'm just waiting to break these levels. If it breaks this one, Okay, more than likely this might be the start of it coming down. If it breaks this level, okay, it's the continuation of going up. Very simple, very basic, and very like non-complicated. So
Yeah, I like it. So I guess my next question would be to you, how do you establish a trend? Is it two bounces, three bounces on the same level, moving to the upside, or is it just a series of higher lows, not necessarily higher lows and higher highs together? Because even if you're putting in higher lows, in my opinion, that is what really counts because that is showing the support to push the price up. But then, of course, once you start to break one of those lows, like you were just pointing out, then yeah, I mean, that's when things can hit the fan and go in the opposite direction. So to establish a trend for you, are you just like you see two bounces and then if it comes back down for a third bounce, you're going to go long or and then set your stop loss to that lowest low, or how are you playing a trade? What is it? How does Joe enter a trade?
yeah, so there's a lot of different variables in that question. But
Yeah.
to answer the first part of it, if I see higher lows but not higher highs, like this example,
Hmm.
this is telling me it's losing strength. So I'm all about trading the momentum. I'm about trading the strength of the move. If it's doing a high, then a low, then a lower high, but a higher low, so it's still doing this, it's losing strength. It's and I always envision it as like a boxer or a swimmer.
Mm.
Like this boxer right here, he's tired. He's tired. He's waiting for that bell to ring so he can go sit down and rest.
Mm.
If I see something like this is a young blood. This is a fighter who is ready. He's been training forever. He's not, going across these lows. He's ready. This guy right here, man, he's just waiting for that bell. He's saying, cut me, Mick, cut me. That's what he's doing.
Hmm.
But here, this has an extremely high possibility of now coming down because he's tired. Then that's when you start crossing this, and now you're doing lower highs, lower lows. But in reference to like a trend, for example, if we have something like this, and we have this one touch, two touch, like this right here, I mean, I can kind of see it. Here's our two touches, and I can kind of see it. Do I enter down here? You can. It's higher risk because what's to stop it from doing this? Nothing. Now, if you're in a bullish market, then yes, I'd enter this. If you're in a bearish market, I would not enter this.
Mm.
If you are in, and this is just like having a lower entry, or if you see the price come down and it starts coming up, like you enter it, it depends on the market. And for me, I trade based on the market because my mentors, like they would show me how to trade, but it was in the bull market. So all they taught was the bull market. What I do is I teach the bull market, the bear market. So basically, you can make money in any market: bull
Hmm.
market, bear market, supermarket. Doesn't matter. Like you are going to make with the way I teach you because you have to know where you're at in the cycle. And Bitcoin can be doing great, and then now let's say the alts aren't following Bitcoin anymore, and Bitcoin dumps but the alts are still doing great. Well, then sure, I can put a bid here. Now, whenever I enter, I never go all in. Let's say I'm gonna do $100. Keep the math simple. Say I'm gonna do $100. I don't put my 100. I'll put maybe 50 here, just in case it falls over. Is my stop loss. I only lost 10% of 50%. And what I do is I wait for it to go up, retrace, break the level. I'll add my other 50. That's how I do it.
Love it. Yeah. So one of the things that I wanted to point out is, you keep things real simple and stuff. You talk about, a lot of that's something that I kind of I wouldn't say I struggle with it. I just don't ever think about it, and that is the whole like analogy thing, like the tired boxer analogy. Like I don't ever think of stuff like that. I just explain what I know and what I'm seeing. Like the big pump move that you're showing there, like the big move up and then a big move down and then a big move up. I call that impulsive price action, which just means it's fast, it's energetic, it's showing strength. Um, I don't know what other people what like what would you call that? Just like just a strong push or just a pump or simple lingo, just a pump up that kind
Well,
of showing strength and
it
momentum or.
depends. It depends on how much this move. Yeah, it depends on how much this move is. Is this move a 15% move, or is it a 45% move? So
Hmm.
that's another variable that comes into play. So if I see this as a 45% move, there's an extremely high chance that it won't take all of it back. Like this is pretty much exaggerated, but if it was like a 45% move, it goes up. There's a really high chance it's going to come down to at least 38% to 50% would be good. Could it come down more? Depends on if we're in the bear market, the bull market, and then for it to come up. So, but if this is like a 5% move or 7% move, then sure. I mean, you could enter wherever, but the faster it moves up without, and this is, let's say this, and the time frame too also matters. So let's say, and the market cap also matters. So there's all these different variables that come into play. But let's just say it's Ethereum, decent market cap. It's not going to move 45% in one candle, and we have this type of move, and this is on the 4-hour time frame. So this little retrace, 10%, 5%. This retrace, good, 50, 60%. Retrace about 40%. This retrace about 50%. So these are all good, but one thing that I have to be aware of is that it can't go up forever. Like it has to come down.
Mm-hmm.
So one thing I'm watching is how much of a retrace did all these get, and what is the percentage. And you can just eyeball it. If you want to get technical, you can use your price range tool, but you can go from low to high and see, are these getting shorter? And again, it goes back to like the tired boxer or the tired swimmer, where it's like it's getting exhausted.
Mm-hmm.
So even though it's going up, now these ups are getting tinier, and so now you have a really high chance of it falling over. So it just depends on like how much this move is. For this one, a nice move would be 15, 20%. In a bull market, a nice move for Ethereum, good 30, for maybe 35%. But like there's so many different variables that come into play.
What indicators are you using for Confluence to just show, that the underlying or yeah, the underlying data is just kind of showing that you're like losing momentum, or are you just purely going off of price action?
So great question. So what I do is I have two indicators that I use all the time. One of them is price action. The other one is countdown to bar close. That's what I use. Now, sometimes I'll throw on these so that people can, see, oh, he has indicators, so he knows what he's doing. But in my opinion, this volume down here is very misleading. So I'm very different the way I trade, I think, because I take everything that I've learned and I try to debunk it. For one, this is my favorite one. Volume used to be my number one indicator. Volume goes up, price going up. Great. Price is going up, but the volume is coming down. Divergence. Price is going to come down. That's what we're taught, right?
Mm-hmm.
However, what I've learned from trading, like a lot, is This volume is like water. It's very fluid. This, just because it's down doesn't mean the price action will come down. For example, let's say you're in a coin and that coin is up 8%, while all the other coins are down 4%. Everything's kind of coming down, but this, regardless of the market cap, let's just say it's a regular market cap, middle market cap, nothing tiny, nothing huge, just regular middle market cap, and it's up 8%. Human psychology says, man, I'm losing my trade, but this other trade's up 8%. Let me get out of my trade and go in this trade. And what happens? Volume, because it's fluid like water, starts picking up. This price continues to go up. So now we no longer have divergence. And this is one of the variables that come into play when I'm looking at volume. So volume, I don't use. I only use it, again, because people see this and they're used to seeing this. Same thing with divergence. There's plenty of times where there's bearish divergence, regardless of the time frame, 4 hour, 15 minute, whatever. I enter the trade and I post it to my group. Hey guys, I'm entering right now. There is bearish divergence in the 4 hour on the histogram. So I know how to trade. I know what other people are looking for. But all that tells me is that if it comes down, that more than likely it'll come down to my support to come back up. And what I'm doing is I'm actually entering right now, knowing that it might come down. Doesn't always happen, even when there's bearish divergence. Doesn't always happen. And if it does happen, the divergence, regardless of what people are taught, higher time frame, bigger divergence. No. I've back tested this hundreds of thousands of times. Does it play out sometimes? Sure, of course. That's why they got the idea. But if you go and you check and you don't, for one, never trust what I say. Always verify. Never trust anybody. Always verify.
None of this is financial
And go
advice.
and look. Right, not financial. But go and look back and see where the divergence was. And let's say on a daily, we had big divergence. How much did it pull back? 30%? Okay. Let's say on a 15-minute time frame, there was bearish divergence. How much did that one pull back? 70%? That would be the beginning of maybe more. So it to me, it really doesn't matter when it comes to divergence. Just know it may pull back, but it's going to find support wherever it finds support based off of people trading. People are very psychological. So if they see a level here, and even though it's a huge divergence, and based off of the divergence, the length of it, you would think, oh, it's a big divergence. It's on the daily. It's probably gonna come down here, but instead it comes down to here where there's support, and then it comes up, and then now people are buying it because some might not even know about divergence. They buy it because they say, oh, this is a good price, or a YouTuber told me about it. That's another variable. It's up. And now your divergence that's really big, well, it just played out 30% or 15%. So there's, in my opinion, there's a whole bunch of variables that come into play. Same thing with money flow. That's one of my favorites. Money flow is going up. The price is going up. Okay. I can just look at my price. The volume is coming up. Okay. I can just look at my price. We have the histogram coming up. I can just look at my price. Now, when I do see divergence, of course, I do point it out. It might come down. And divergence does, I want to say maybe like having 80%. I don't know the actual figure. 80% it plays out. But like I can see this. I can see it already. Like nothing special about me, but I can see it. It goes up. What goes up should come down. What goes down should come up, unless it's a rug. So with this movement right here, and right now, barely any move, but I'm in a long, got in right here. But I know it can't go up forever. So I don't, if maybe there's divergence on a 7-minute time frame, or a 13-minute time frame, or a 28.5-minute time frame. I don't know, whatever y'all use, or whatever people
I
use.
don't use all that.
Yeah, and it's so funny when I'm watching other people. Look right here, guys, on the 3-minute time frame, it's a bearish divergence, and on the 13-minute time frame, it's like, are you literally scanning each minute of the time frames to find
Yes.
what
Yes.
makes sense to you? So what I do is I see this, I know it's going to come down. When it comes down, I'm hoping it finds support here. If not, hopefully here. If not, well, I get stopped out. So that's how I do mine.
Beautiful. Little Fish has a question, which I'm pretty sure the answer is no. But curious, do you use the fixed range volume profile?
I absolutely love the fixed range volume profile. Now,
Oh,
there's a few
really?
things that I love. Yes, I love things that show me volume. Volume, not
At
not this
certain
volume,
price
because this
points.
right. So this is based off of time. On the 15-minute time frame, we had this much volume. But the anchored VWAP, it shows me the average of volume, the fixed range volume profile. So whenever I see, let me clear up my chart. These are great questions, by the way. So whenever I see somebody use this, it kind of worries me a little bit. The visible range volume profile. And there's a lot of people out there who've been trading for a long time who use this. I don't like it. The reason, can I have my drawings or would that go away? Hide drawings, perfect. So the reason I don't like it is because it shows you the visible range of what you're looking at. Here is my PLC, point of control. If I do this number, give it a few seconds, and a bingo bango. Here is my PLC. I don't want this moving. So whenever I see people using this, I kind of, maybe I might not want to. I mean, they could be amazing traders, but when I see this, it's like, man, why would you do that? So what I do, get out of here. Let's see here. VRV, get out of here. So what I do is I actually have it on my favorites toolbar, which is down here. And anytime I click on anything, it always shows up on the upper left-hand corner where in blue, so you can find it easily, in case y'all don't know. And what I'll do is I'll use it from a swing point. And for this one, I want to use the larger picture. So I'll go from this low. And then I'll come all the way over. It'll show me this. So this is my PLC. And I break everything down super, super easy. If it's above my point of control, it's good. If it's below, not so good. Now, is this a support resistance level? In a sense, it is. But I treat it more so as a gauge. Is it good or is it not so good? And same thing with like moving averages. But for the fixed range volume profile, absolutely love it. The anchored VWAP, the same. I absolutely love it.
You ever
So
use
this is,
the
what's that?
session volume profile?
Yes, I've used it a few times. And it's too much for me.
Yeah, so the reason why I ask is because you can actually, if you bring up like a session's volume profile and you put on like a 5-minute chart, and you can see the sessions. What I like about it, well, actually, what I've just started doing is breaking up each individual regional session, like your New York, your London, and all that stuff, and find the volume profile of that session. And you'd be surprised at how many times the levels on those volume profiles of those sessions get played. To your point, like say London, I pull London. I call it's called the kill zone, so it's like between like 2 and 5 in the morning, something like that.
Mm-hmm.
3-hour time frame. I'll pull a volume profile off of that, and then watch the market New York open, and then typically if we're like sorry RS Miller, typically if we are bullish, then we're going to be above that London point of control. If we are bearish, we're going to be below that London point of control, possibly even Asia. The main thing that I look for, though, is just consolidation ranges and just range bound price. There's that. I try to find the point of controls in those. Like if we're looking at yours, we have that low, and then the second low, that would be like a range for me that I would pull a fixed range volume profile on, and then we could see if that would bring up like a point of control, and then we come back down to that low. Well, you just popped up a excuse me, a value area low. But yeah, I like to use that for, I don't know, I use the volume profile for it a lot, but what I like to see is, so the point of control will start to lift on like between the different ranges, or between the different candles, if the price is being bullishly supported, because that is showing your point of control, right, is where the most volume is being traded. And if that level is constantly being lifted, then that can tell you, hey, price is being bid to the upside, we are bullish. If you start to see the point of control start to fall to the downside, putting in lower lows, it's kind of like that, right? Think higher highs or lower lows. Are we going higher or lower on our point of controls? Because that literally shows you where the money is being put in the market. Is it pushing it up, or is it bringing it down? So that's why I like to look at like a session volume profile, something like that, because then you can kind of see the stair step, typically you'll have like a low and then a high and then a lower point of control if like you're range bound, you're consolidating. So that is what I tend to look for. And on going back to your divergence points, what I tend to look for, it's not like, I do look for bullish and bearish divergences because they are so, they do play out so well. Sorry guys, let me fix my mic.
And you also have to know how other people are going to trade. So by knowing that, I mean, that's good.
Yeah. And so what I look for, I'm not just like looking for a bearish divergence just whenever. I want to see a bearish divergence at a high. If price is coming back up, we get a bearish divergence and we see a spike in volume above a high, but then price falls. That to me shows that the move to the upside was weak. We've got the bearish divergence, momentum is falling off. If we break down and on like a lower time frame, like the next one down, like if we're on like a 1 hour, I would drop it down to 15 or a 5, and then I'll see the market structure. And if we break that low, that most recent low, then that would signal to me, okay, we should get a retrace, but we probably won't take the next high, or the most recent high, and we'll fall. And that'll be a good point to take a short, because I got my bearish divergence, I got my failure to break the high, or at least to maintain the high, and then a pullback, and then on the retrace back up is when I would say, all right, time to go short, throw a stop loss above the high, and then let it run. As long as it's come back down and it's broken, a previous low. I want to see that low broken. You were pointing that out earlier as well. When you're in that uptrend, you want to see a low broken before you even think about going short. You're not.
Right. And if you do go short, just know that it's going to be a higher risk. And sure, you can call the top, so you can post it on X and be like, "Look at me, I called the top." But if it were to flip and it goes the other way, well, those people aren't posting that because it's literally instead of catching a falling knife. If you're doing a short, well, it's just the opposite, going up. So yeah.
Mm-hmm. Yep. I learned to stop trying to catch tops and bottoms a long time ago. Like you can't.
So right now I'm gonna close my long. Close them on. I don't like how it's looking right now because I'm pretty sure it's going to come all the way down here, and I can just get it again. So I closed it right there. I'm thinking it's going to come down to here. I don't want to wait for it. That's what I'm thinking. All right, I'm sorry. Go ahead.
I know you're you're fine. No, what and then I mean, I gotta say, man, I ran through all kinds of indicators and indicator suites and stuff, but when I started going just back to the basics and then just going over price action, that's when and started to manage my risk more properly. That's when I really started seeing the benefits. It really started to seeing, improvement in my trading is, one, being patient, letting the trade come to you. Don't try to force a trade. And then risk management and whatever the other one was that I said. I lost my train of thought. I'm trying to read the chat at the same time as I'm talking. Not a good thing to do. What number is it coming to, brother? I don't know, Golden Wolf. 102,700. Oh, what's that level you've got pointed out there, Joe?
Oh, I think it's going to come down to 102,430. And I'll change the color of it so you can see it better.
What exchange?
I'm on Mixie.
Mixie.
I like Mixie.
How do you get that to pop up? What?
How do I get what?
His percentage thing?
Oh, yeah, I just copied it from my exchange.
Yeah, you can just copy and paste images onto your trading view. I do it all the time. I haven't even shared a chart yet. But you can't see my chart, so I can feel like it's kind of pointless. Can you hear me?
Yeah, I can see it on YouTube. It's just like a 3-second delay.
Yeah, you're going to have a big time delay. Well, let me just go over my potential distribution top, okay? Y'all don't kill me in the comments in the chat, all right? I just want to I've been going over this for the past couple of weeks, but Joe is here, so I don't know if he's seen this or not. But I started sharing this, I want to say 2 Sundays ago on a macro Monday. By the way, it is Monday, but this is still TA Tuesday because at the Madhouse we go by UTC time. So it is technically a new day. And because the show is so late that we pick up a lot of people from across the world, and it literally is a new day for them. So so that's the reason why I did that. Plus, it's the Madhouse. 14 days ago, says R.S. Miller. Hey, R.S. Miller. Paying attention. Shout out to you, R.S. Miller. All right, so come on. What's us being so laggy? So this indicator is called J1 Wyckoff schematics. This is a distribution schematic. Get rid of all this other junk. Get out of here. Get on out of here. Back it up, back it up. 12:49 p.m. Tuesday, says Jay Violet. Yeah. Yes, Tuesday your time. Just for you. Yes, just for you. VWAP. Turn off. I just want to show the schematic. All right, so, I mean, a schematic is a schematic is a schematic, right? There's no guarantee that these things are going to play out. Just want to put that out there. But the thing is that this thing has been playing this to a T. And this is a pretty popular distribution schematic, at least for people that follow the Wyckoff method. I wish my chart wasn't frozen. Hopefully I'm not frozen for anybody else. I think I just saw you blink. Okay, you moved. We're good. Oh, I just realized I'm not even showing my chart. Hey, there we go. All right, so maybe now it'll
I'm
work.
waiting for the delay. It's like, man, how long is the delay?
Oh, really?
Yeah, I thought there was a delay. It's like, so I turned up the sound that from the video. It's like, no, it's like 2 seconds or like 10 seconds. So I was like, where's
Oh,
his
I
chart?
I just hadn't changed the chart yet. So
There we go.
there we go. So this schematic right here, you'll see it in several seconds, but we get the push up, off of our lows. We get the impulse down here pushing to the upside. So the pump to the upside essentially, and this is what's called a buyer's climax. And then we get a pullback called an automatic rally, not setting a new low. Then we get these secondary tests to come and push up. That would be this one over here. Remember, I'm just looking at market structure and highs and lows, not necessarily time, because these things play out in several different ways, but highs and lows and what type of moves they are. Like, are they corrective moves or are they impulsive moves? Whatever it is, it doesn't, as long as it's flowing very similarly. But I can go more in depth into it, but running a little bit out of time. So we got the secondary test that's going to be right here. And then when you get the secondary test, that's when you get a sell-off. Then you come down and you sweep the lows. And this is known as your sign of weakness. We're coming down, we sweep the lows, and then we push back to the highs for the up thrust. So this is the up thrust. This gets everybody and their mom to continue to buy. Remember, this is a distribution schematic. So the whole purpose of this is to show institutional distribution schematics, like the way that they would distribute price by manipulating the market in this certain way so that it entices buying. That way the institutions can sell en masse. They can sell in big orders. But in order to do that, because the institutions are so big, they need a lot of retail to come in to sell to. So they'll push the price up super quick. That way that induces that liquidity into the market to buy so that they can then turn around and sell. And then right here, this is a distribution, this is distribution playing out in here, consolidation within the middle of the range. Then we come up for the up thrust after distribution. It's just a technical name for it. The pump up after distribution, sweeping the highs, putting in a third high. Now, this is, and once you come back down into a range after putting in a third high, and especially if it comes down and sweeps or comes down below a previous consolidation range, or even this low right here, this last low before this high, you sweep that, that is showing a super sign of weakness. It's not looking good. But add on top of that, any indicator, if I pull up the RSI, if I pull up, of course you're not gonna, if I pull up the RSI, if I pull up our chart prime, oscillator pro plus, doesn't matter which one it is, if it's an oscillator, is going to be showing you the same thing, if it'll come up or not on the daily time frame. So I'm looking at the daily time frame, and we're just getting a little bit of bearish divergences on the price. So that is something that I'm watching very closely. The fact that we keep failing to take these highs is not a good sign to me. Doesn't mean that everything's over, but it means that I could see some choppiness for Bitcoin for the next month and a half, while altcoins set to take off. Bitcoin loses its dominance. It falls like a rock over the next month and a half. Altcoins, several of them go ballistic. Some of them get some decent, 3 to 5x's, and some of them probably may not even see, another 100% gain ever. But The point is that I'm seeing a little bit of weakness in Bitcoin, especially when we look under the hood and we see, the money flow coming down. I mean, you were just trash talking it, so I feel like I can't even use it now. No, we see,
But
but for
it's true
me,
though. It's true. Money flow comes down, and you
hmm
see the price coming down. Money flow
hmm
goes up, and you see price going up.
hmm
So to me, it's like, why do I not look inside a house when I can just be inside the house? Price
hmm
action versus money flow. But I see a lot of people using money flow, and they're like, money flow is coming up, and the price is coming up.
hmm
I'd rather just be in the house.
So see right now, there's a zero line. So there's a thing called, and they have it in stocks too. It's called in the money and out of the money. Typically, when you're in the money, you're good. Things are kind of bullish. If you're out of the money, your things aren't looking good. It's bearish. So it's just being like in the money, out of the money. It's kind of like a general concept. But for me, it's more of like a momentum filter type deal. Is kind of what I'm looking at it for. So the money flow will start to fall even as price is coming to the upside. And to me, that is showing money's coming out as it's moving up, which means we're seeing more selling than actual buying. So and it's losing steam. It's exhausting. But to your point earlier, all we got to do is look at the candles and we can tell that, it's looking weak. I mean, we get the big push up and it starts to get shaky, right? It's getting shaky. The boxer's knees are getting weak, right? They're getting
Right.
weak. They're getting heavy. You get the one last, just one last push, that one last swing, and you fail. And it just rolls over and it's done. You consolidate, try to stabilize for a little while. Try again. Try another push. Fail to claim the high again. So, all right, we're coming down. We're trying to consolidate again. And then we'll go for that one more time and see if we can break it. And I think that is what's going to be the deciding factor, is when we come back up for that third push, because I do think we will get one more push and break another high. For me, the question is going to be, how strong is that push going to be? Is it going to close above these highs, or is it going to be another failed attempt? And that would just be the ultimate sign of weakness for me. And for me, that's when everything will wrap up. At least a lot of the market will wrap up, because I don't know if you think the same way, but for me, it's like you have Bitcoin go up and then a lot of stuff top with Bitcoin. Then Bitcoin pulls back, a lot of stuff, everything kind of pulls back with Bitcoin. But then in Bitcoin goes into a retracement, and in that retracement, a lot of the other alts pop off and go on their big runs. And then at the end of that retracement, once Bitcoin fails to, reclaim the highs and starts to roll over, that's when everything rolls over after the Bitcoin retracement. And that's happened literally every cycle. So you get the profit take, you get the big push up to try and induce more buyers so that you can just dump the rest of your bags. When I say you, I mean the institutions. 90% of them, 99% of the time, it's the institutions, and they're dumping. So, yeah, man. Joe says sinking toaster.
I got a question. That Wyckoff theory thing, or Wyckoff schematic,
Yep.
that's an indicator?
Yeah. So it is an indicator. It's called J1-Wyckoff schematics. You can change the type of schematic. You can double click on it. You'll see it in a second. But it has distribution 1 classic, distribution 2 classic. I'm not sure what these empties are. But it also has the accumulation schematic on it too, and knots accumulation, which I don't know what that is, and I'll have to look into that. But yeah, essentially you just
That is
line it
very
up.
cool.
Yeah, you have to line it up yourself, but it has the schematic. It just prints the schematic for you, which I think is pretty cool.
Right.
When I got into,
Well,
I'm
for me-
big into, I shouldn't say big, but I use, some kind of basic foundation, Elliott wave theory, mostly for like market structure. Typically, when you're getting zigzags like 3-wave moves, you're in a corrective phase of the market. If you're getting 5-wave moves, you're in a trend. So for me, that's another reason why it's like, all right, we come down here, we take this low, we come up, create a high, and then we come down, sweep that low. That's a 3-legged move. Then we have another 3-legged move to the high. So we've got the 1, the 2, the 3, and then we roll over. And this is just a simple zigzag, not corrective. Well, I guess it is corrective, or is it motive? Whatever it is, it's a reversal pattern. So 1, 2,
Right.
1, 2, and then we are 1, 2, 3, 1, 2, 3, and then it rolls over. So I don't know. If I see 3 waves and the first and third waves are equal or similar in length, that tells me that we're more likely than not correcting, and that's what all this looks like to me. It just looks like correction or distribution. So it's one of the two. Obviously, it's correcting. The question is it distributing, or are we consolidating? Or accumulating. And for
Right.
me, the failures above the highs, and the failures above the highs, and just seeing lack of momentum, and indicators, and I just don't like the way that it looks at all to me, to be honest. But yeah, I mean, I could be
Yeah.
wrong, but we'll see.
For me, I'm not a big fan of Wyckoff.
Mhm.
I got burned really bad with my third mentor, I believe, because he was really big in Wyckoff. But I will say, though, when it plays out, man, it's amazing.
Mhm.
But because you have the spring, then you have one without the spring. And I was entering because it had just exited the spring. And I'm like, man, I'm going to make so much money. But then it turns out that there was a spring later, like the official spring, I guess. It was like, so yeah, it was pretty rough. I lost
Yeah.
a huge chunk of money. And the thing that I didn't like about the Wyckoff theory, but again, when it plays out, it's kind of like when you're using the ghost bars. Like you can put it on there, it's like, I think this might happen. And then when it does, like, oh, awesome. But when it does, it's like, I just tried it. But as far as the Wyckoff, it to me personally, it's just kind of like a pattern where it gives me the bias of what it should do rather than what could possibly happen. But I guess I wasn't, and I guess that's for everybody too. Like you need to be mature enough in trading wise to know that just because it says it's going to go up doesn't mean it's going to go up. And I think I was so immature as a trader that I thought, oh, well, this is the spring. Like it has to go up because it's the spring. But, well, it didn't. So, yeah.
Yeah, I mean,
But now when I see them, it's like I kind of like it when I do see it play out. It's like, oh, that's cool.
I look at it as kind of like I want to swim with the whales, right? I want to do what the big boys are doing. If the big boys are selling
Smart.
off, then this is my time to start selling off my bags. If the big boys are accumulating, then it's my time. So it's more of like a high time frame DCA type deal. For me, when it comes to the Wyckoff, yeah, you could see it on the lower time frames, but Wyckoff was built for institutional,
Right.
to show institutional price action. The way that they work. So they're working on high time frames. Institutions are not trading the 5-minute. Okay, it's not happening.
Right.
It's not what they do. They're moving way too much money, and yeah. But we've reached the top of the hour, Joe. I am super tired. I don't know about you. You'll probably still be up for another few hours.
Yeah, I got a lot of work.
You got a lot of work. Oh, so you're are you an RN?
Yeah.
Yeah, that's super
Yeah,
cool.
I been an RN for like 8 years now. I haven't done work in maybe like 3 or 4 years, probably, maybe even about maybe 4 years, because I'm in crypto now. So
You full-time trading?
it's good. Yeah, I've been a full-time trader now for like 3.5, 4 years. About my time gets mixed up, but around there. The last time I worked was during the peak of COVID. So that's the last time I worked.
Oh yeah, that's right. You had to go through all of that, huh? Or a little bit of it?
Oh yeah. It was man, I getting paid like a doctor. Oh my gosh. And there was one time where I did like an extra shift, which was overtime, and getting paid like a doctor. Man.
Yeah, I've got a
Pretty nice.
friend that's an RN, and she was making bank during the pandemic. Let me tell you, like, just because. And she worked ICU, so she was doing the ventilators and stuff like that. So
Right.
she also had to deal with a lot of all of that stuff. So I mean, that's kind of traumatic, I would expect. But I guess,
Heck yeah.
Yeah, I guess you got to do what you got to do. But yeah. Yo, thank you for coming on, Mad Man. We got to do this again.
Yeah, I loved it. It was good. Picking my brain, seeing what I do, picking your brain, seeing what you do, what indicators you use, why you use them. And I think that's very important, like for people to just to kind of like hear other traders bounce ideas and why do you do this and why do you do that. To me, I think it's just important that other traders can see and hear the thought process that that we have.
And not just that, they can be like, oh, that, because sometimes someone another trader, let's just blow Joe on YouTube, you're just like, he's excellent, right? He's just a great trader, but you watch him one time and you're like, I am just not following this, I am never going to be able to understand this. Then you go over to Trade Intuition and you're like, oh, that was easier than I thought it was. Why didn't I just do that instead? Or it could be the exact opposite. People can go to you and be like, all right, he's speaking, I mean, it's basic, it should be understandable to me, but some people might not see it as it could be teaching style.
Yeah, the
it
only
could be a
complaint,
whole number of things.
Yeah. The only complaint I get is that my stuff is like too easy. It's like I'm not using big words. I'm not, it's like, dude, you don't have to. Like, you can trade doing what I do. So yeah.
Important resistance, man. That's all you really need. Support resistance, some risk management.
Yep.
I don't know. Look, I made money the last bull market simply buying low and selling high. I didn't even know how to short, I waited for a price to come down to my levels. I would buy on the alert, and then I would sell on a pump. I called it, what I call it, buy the dip, sell the rip. That's what I call it.
There you go.
So, but yeah, thank you everybody for joining us this evening. Shout out to all of you. We appreciate you as always, and mad love. And we will see you all in the next one. Joe, thank you for joining me. I'm going to go ahead and actually sign this out. And if you have any parting words, please send them.
Just come watch me, guys. Come watch me every day, Monday through Friday, 12 p.m. Eastern Standard Time. My channel name is Trade Intuition. And then, of course, Saturday and Sunday at 5 p.m. Eastern Standard Time. We do go over the basics of trading. Do I know more than the basics? Of course. I've been trading for a bit. But I break it down in the most simplistic form. And the only thing you're going to do is like, man, is it really this easy? Trading is only as complicated as you make it. As long as you have a solid foundation, you can build anything on top of it. So it's extremely important to build that solid foundation. That's what I do every single day.
Awesome, man.
That's it.
Appreciate it, Joe.
You got it, man. Thank you, guys. Don't forget to smash the like. Appreciate everyone. See ya.
See you, man. All right, guys. Thank you for joining Markets After Dark, where we go mad on the charts. Don't forget, tomorrow morning we will have Good Morning Crypto right here on the Piper Academy Network with BC Port Corp. Following them, we have at 8:30 or 9:30 Market open, we have OC Guy and Army Piper for the morning market report. Then at 4, we have the guy that you just saw, Trade Intuition, and then the crypto nightcap with TradeFly and FD White. Then we'll be right back here tomorrow for a Wild Card Wednesday. Thank you all for joining. I hope you all have an amazing, beautiful, wonderful, radical sleep. And I will see you tomorrow. Good night. Peace.
Welcome to the night where we light up the spark. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, that shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight.
Yes, there is a Billy Goat Tales tomorrow night. Don't forget to check out Billy Goat Tales on X at
From
Billy
Bitcoin to
Goat
Ethereum, we're mapping the
Tales.
road. Stock tips
Check
and
them out.
insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark were only brilliant shows. Hit that subscribe and join the ride. In the world of finance where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide. On the charts with Lunar's bright light. Crypto markets soaring through the night. From big dome markets soaring fast. Markets after dark, that shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trends, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you.